Hey traders, Nick here on Tuesday night. I usually do this video on Sunday night. It is Monday night indeed. Sorry about that. Anticipating tomorrow. Um, I held out a day because the US markets were closed, but the world markets were open, so were the futures. So I'm going to give you a clue. The futures were very, very wild and very, very red. And I can't tell you that we won't open green tomorrow because why? We are in headline mode. So I'm going to make it is very scary, but I'm going to make it very unemotional. I feel for the people in Ukraine, and I grew up in the war. So my concern is the headlines, how they will affect stocks. And from that perspective, I'm going to ignore the headlines. I'll tell you the scenario over there is pretty simple to me. It sounds like the conflict in the Ukraine now there's actual fighting, and there's apparently now boots on the ground from Russia inside the Ukraine under pretense of, hey, I'm here keeping the peace because there are hundreds of thousands of people, separatists, that want to be Russians, I think, and therefore they might be beat up on by the Ukraine. So we're just here to keep the peace. That's the pretext. So I don't know who's right, who's telling this right story. That's my understanding. So if the fighting stays local, I'm okay with that from the stock market perspective. I'm never okay for people losing lives over war. Trust me, I've suffered it firsthand. So what concerns me on a global basis, that's the worst case scenario that I do not think is going to happen, which is actually the US, Germany, France, whoever, they actually put boots inside of Ukraine to actually fight the fight with Ukraine. And I don't think anyone has shown that. Besides, the whole world just lost millions of people trying to fight a virus. Last thing we need is to start our own war to kill each other. So, not likely to happen. The local conflict is there. So there's no doubt about it. And Wall Street is taking its time getting used to it. So what happened Sunday night? The market fell apart as soon as the futures opened on Sunday night. No talks. And then they went back to green. They went from 1.2 down or 1% down to green 0.7% last time I checked. Hey, we have a Putin-Biden summit. And then, nope, that was denied, and we went back to red. And today, we opened really red because just before we opened, about 45 minutes, maybe an hour, there was a headline. I know headlines for somebody who doesn't track headlines because I've talked to hundreds of people and somebody told me. So the market fell apart because we actually had boots cross borders into Ukraine from Russia. And of course, I said, put on your seatbelts, it's going to get bumpy. And the markets fell over 2% on that headline. We are currently, it is 4:40 p.m. Pacific, so 7:40 Eastern, and the markets are recovered somewhat. And I don't know if we're not going to be green. All it needs, hey, yeah, we have talks scheduled in the next 2 weeks. Well, suddenly we have no issues for the next 2 weeks. Nevertheless, I'm going to make it as mathematical as possible, and that's the only way we can overcome the emotional. First, I'm going to scare the bejesus out of us. I can tell you that there's a scenario that takes us down to here, 3,700, 3,600 in the SPX. That is a real scenario that can start tomorrow. Okay, that scenario will loom for the whole week. So I'm scaring the heck out of everybody because it exists. That's not my assumption. Okay, let's get the scary part out of the way. Let's get to the good stuff. The good stuff is I have one line to watch. On January 24th, the S&P SPX or SPY, whatever you watch, had a bottom, and it was hecka scary, very, very scary. But let me walk you through it. And why was that important? Because we needed to hold this. We needed to hold 4280, and we didn't, but we didn't collapse. Just like tomorrow, this week, we need to hold 4220. Hopefully we will. So here, they needed to hold that. So what they did that day, they fell through it. So they opened right around 43.50. They crashed down to 42.20 and change. And then they recovered the same day and closed really green. And they never looked back. They tried 3-4 times, the bears, and they left 4 wicks higher than this. Almost penny perfect. So the market said, no way, I do not want to be here, let's go. Knowing how serious this is. Now the same scenario plays out here. And this candle needs to tomorrow be like this one was to this one. So this week, I will track the January 24th low for the S&P and for the NASDAQ. I haven't looked at the Dow. And I did look at the small caps. And let me transition into the small caps. IWM or RUT. You've heard me track them for months. Guess what? They're the ones with good news. What do you mean good news, Nick? Okay, so for the last 4 weeks before this week, they had 3 green ones and 1 red one, but they maintained a higher low, higher high. So they're the ones that collapsed first, corrected 23%, and they're the ones trying to move back first. They can infect the other ones positively, and the S&P can say, hey, let's run with them. However, they are too small to drag the other indices. For example, if the SPX moves, it can drag the rest with it because it has giant companies in it. Same with the NASDAQ. These guys, all 2,000 stocks are not as big as Apple. So they can't drag everybody with them. They can only influence. And guess what? They too will give up if nobody listens. So the worst case scenario there is they lose the January 28th low. I thought they bottomed on the 28th. Anyway, their low from January. Yep, the 28th. They lose the January 28th low, and then they go much, much lower. How low? I don't know, 160, 150, something like that. So there's a gap. So from here to here is fair game. 172 to 165 is fair game. So that's not my forecast, but if you lose the low from January, you're going down here. The bears will try. Okay, so that's how it happens. I'm going to make it mechanical. I'm not going to make it emotional. I'm not going to give you reasoning for it. It's 1 + 1 = 2. You lose support, you're going to get selling. It's as simple as that. You lose support, the machines will flip code and start selling pops, more so than they already have. Look, they popped, they sold it. They popped. If they sell it, they'll sell the next pop. They'll sell the next pop until they hit strong support, and then they go sideways, and then they recover. So they sold one pop, and that's the second. It's important we don't break it. Then they'll sell the third pop, and then it becomes a habit. Okay? So it's as simple as that. Very mechanical, not emotional. It is serious information. I mean, these are serious events. Nobody wants to go to WW3. But look at all the support levels I have for myself. All these orange lines are levels of support. This is a weekly chart. See, now it doesn't look so crazy if we fall to 36%. It's still right here. That's all-time high. So it would be painful, but we have a lot of levels of support. That's one weekly candle that's pretty important. So 38.45, super important. 35.90, super important. All these candles are important. 37.40 is important. So we do have supports. We will just it's unnecessary damage that we have to go through. All we have to do is just hold the low of January. That's it. All right, I'm not going to get too wonky with this. I don't know if I mentioned Fed heads, etc. We do have earnings still. We do have a couple Fed heads talking. I don't think they're going to matter. Nobody's looking because now the TLT, the opposite of rate hike fear, is rallying. This is a weekly chart. I'm like, wait a minute. So after hours, bond prices are soaring. So it is not going. This goes against rate hikes. So guess what? The upside. Look, bond prices are soaring. The upside of this crisis in the stock market is it ties the Fed's hand. Now they have less urgency for raising prices. Believe it or not, the Fed tends to the stock market, whether they admit it or not. They do cater to the stock market. All right, I'll leave you with, again, the reminder that if you want to get emotionally unattached, you'll watch the SPX. I'm sorry about the noise. I hope you can't hear it. My son is tuning his truck outside. It's very noisy. So, look for lines instead of looking for headlines. Woo, wait a minute. Look for lines, not headlines? I like it. I'm going with that. Look for lines, forget the headlines. Yes, I'm going to work on this. All right, Nick signing out.